welcome traders. Todd here. Welcome to very impromptu YouTube live stream. It's September 17th, Tuesday night, and we're going to do a free video, but rather than record it, can it, upload it, we thought, what the hell, we'll just do it live, stream it out to you guys, just test for tomorrow. We took last week off for the Wednesday morning YouTube live stream, so just want to test it, make sure we're in good shape for tomorrow, which it looks like we are. So just, hey, what's up, Ezekiel? Just type in, how's everything sound? Look okay? Sounds all right? Besides me chewing gum. We'll just stick this right here. How unprofessional is that? Oh, you know what? Yeah, I think we're good. All right, so yeah, we'll do a free video here and kind of show you what's happening. We just did the members video. Just recorded that, sent that out. So just give you a little kind of look at what we're seeing here into the market. Obviously, the Fed's coming up here in 2 days. We saw some interesting sector rotation today, kind of support what happened, what I see in bonds and also precious metals. So let's just take a look here quickly. And again, just kind of an official test for tomorrow. YouTube Wednesday live stream is going to be 8:45 Eastern time. You should see it on my channel here, and be sure to set the notification. So just a reminder to let you know we're gonna do it tomorrow. So, all right, let's go. Okay, so starting off with the S&P here, there are several interpretations that we're looking at. For now, though, we do see this as post-triangle thrust, and we are set to move towards new highs. 30, 28. Are the old highs, and we are only 23 points away from that. So I do think ultimately we will get that push. NASDAQ, same kind of situation. I see NASDAQ slightly different and in a position to do something a little bit more bullish, which we could be doing a third of a third up towards the NASDAQ, taking us towards 8,200. So we're seeing some good signs as to what's happening here. The rut, the rotation back into small caps, which I think is highly driven by short covering, continues. We haven't yet cleared channel resistance. Above that, you have the 786 of the big late 2018 into 2019 drop. If that 786 were to break, that would be a very constructive sign for the uber underperforming small caps. Okay, so let's take a look at the bonds here real quick. I do see us as moving into support, and what's interesting, and I've seen this before, guys. I've seen there's been times where sectors have kind of moved themselves, stock sectors have moved themselves into position that would actually lead other major macro asset classes like fixed income and commodities and currencies. It's unbelievable. Not that often, but I've seen it before where stocks actually lead the other asset classes. And I thought, if you looked at the sector leaderboard today, that's exactly what we saw. I'll come back to the macro markets here in a second, but let me just kind of scroll down and show you that the big winners today were utilities, were materials, and then real estate. I don't have XLRE in there. Sorry, I need to have my Thinkorswim up. But real estate, utilities, and to a lesser extent, staples. Those are all your dividend producers, dividend yielders, which will respond in a falling interest rate environment. The problem is, interest rates haven't been falling; they've been going up a lot. So, is that sector rotation starting to indicate to us that the wave count? Sorry, I screwed it up already. Let me go back. But that's fine. I was just showing you my quote sheet. But again, real estate, utilities, and staples were leading it today on a percent change basis. Is that telling us that the wave count that I'm showing you here in bonds is in fact accurate, where we might get a little bit of a B wave bounce here, and we could see a bounce. Bonds go up, yields go down. Also, everything okay? Oh, that's fine. Also, gold, let's take a look at gold. I don't see it as constructive of bonds, but it's a similar kind of outlook as to why we would get a bounce. We have pulled back into the area of the prior fourth. Gold looks supportive, might want to start looking back higher. Silver is another thing we talked about in the member webinar here. Before I bring up the silver chart, let's check this out. And of course, it doesn't want to work. Sorry, well, I'll have to save that for you tomorrow. My gold-silver ratio doesn't want to work. zoning? Anyways, I'll have that ready for you tomorrow. And it's actually pretty good. Actually, I'm glad. I did an Elliott wave count on gold-silver ratio. I'll show it tomorrow. I'll have my workspace over there, my normal trading computer over here. It's actually showing that gold should continue to underperform silver. Silver has pulled back into a very nice support zone, which is something that we've been watching. This first cluster of fib support in green at 17.38 to 17.4 looks to be pretty supportive, and we did get a push. We're starting to get a rally back up, and silver might be ready to move on up. Okay, so if bonds are at support, if gold and silver are at support, and we're seeing a little bit of sector rotation heading into the Fed where they're expected to cut rates, where does that leave us in terms of this value growth sort of relationship? Same thing, my sectors don't seem to be working. My ratio, sector ratios over here, my ETF ratios, I'll have them set up for you tomorrow. But same thing where we're seeing that this whole rotation out of growth into value based on the analysis that I will show you tomorrow in the webinar should continue. And it's verifying what we're seeing today heading into the Fed. So that's what we're looking at. There are some stocks that we're looking at. We'll talk about some setups. Starbucks, I did a CNBC video today, and Starbucks looking good. Match.com is another one that we're looking at. We'll talk about tomorrow. So there's some good setups, but I just wanted to kind of hit the macro stuff for you at the top here, okay? Hopefully that helps, guys. Check that out tomorrow. Also, we are doing a big quarterly membership push. If you go to tradinganalysis.com/ride, let me pull this over. With a quarterly membership at Trading Analysis, you get like an 8-hour training course for an extra $30. Shot on this technology. It's pretty unbelievable. Tradinganalysis.com/ride if it's something you're interested in. So $477, you get 3 months of our membership plus a course that we could easily price at $400, $500, $600. So if you want to check that out, again, that's tradinganalysis.com/ride. All right, guys, we'll leave it there and see you tomorrow morning. Have a great night.